All right, thanks everybody for joining. This is the home ownership discovery class hosted by UMortgage. We have a very special guest today. We have Andy Dowdy on the call. So Andy and I have worked together for several years, lots of different positions, and it's an absolute honor to be sharing the call with you today, Andy. Maybe just tell everybody on the call a little bit about yourself.
Yeah, absolutely. Chad, thanks for having me. I've had the pleasure of working with Chad for 8 years now. We go way back. We've held a handful of different roles together and really have come a long ways in the mortgage industry. Just a little bit about myself. I live in Cincinnati on the east side. I'm from Michigan originally, and I have lived here for about 14 or 15 years. I've been in the mortgage industry for 13 of those years that I've been here. So I absolutely love the industry. Love helping new and experienced home buyers. I love the connections that we've been able to make over the years with our agent friends, the partnerships that we've been able to come about as well, and overall just helping people get into the home buying ownership process. So really looking forward to going through everything with you guys today with Chad as well.
Awesome. So just to kind of set the table just a little bit, we have on the call today, we have home buyers that are pre-approved in the process of looking to purchase. We have buyers that have not yet started the process. They're just in the kind of the feeling out portion of the process. We have actual real estate agents, our partners on the call today. Super excited to have everybody. And we also have some investors that are on the call looking to grab some information. So we're going to make sure that we are covering all the bases today. We're going to make sure that we get you out of here in approximately 45 minutes. We want to make sure that we're bringing value to the call so that everybody on the call is getting a little bit of what they need and as to why they're here. And so let's go ahead and get started. So number one question that Andy, myself, anybody in real estate, anybody on the mortgage side, number one question that we're hearing right now is it still a good time to buy? Okay, so before we figure out if we're going to buy, let's talk about what is the alternative to buying, right? So if you're not going to buy, you would have to rent, right? So is renting a good alternative? Okay, so here's a great statistic where there were several property managers that were surveyed, and it shows that 73% of them are saying that they are planning on increasing the rent over the next 2 years. So this is not a new phenomenon. This is a ongoing battle that people that are in a rent situation are seeing on a regular basis. Okay, so the rent increases, having zero control over that. And we're going to kind of show you here a couple of different slides where the actual increase, and there it is. So rents have risen consistently over the decades, and when the rent rises, you pay more. And this is a really great chart that shows all the way back from 1988, 1998, 2008, 2018, and then that top right corner there, that's what it looks like in 2022. Fourth quarter, so the most recent information, and you just see that skyrocketing rent. Okay, so the problem with rent is that you're at the mercy of the landlord. And I read something actually as early as this morning that said the number one factor in inflation right now is rising rent. Okay, so if you think about every time you go to the gas pump, every time you buy a gallon of milk, or anything that you're purchasing, you're seeing an increase on that on a regular basis, right? So the rent is no different from that, and they're going to continue going up. Okay. Now, a really great tool for everybody on the call is the website that you see here, rent.com. You can go on there no matter what market you're in. We have it pulled up, obviously, to the Cincinnati, Ohio market, but whatever market that you're on or that you're interested in. We actually have some buyers that are looking in Tennessee, looking in Florida. You can use this exact same tool to be able to see what the rent trends are doing. There's a lot of other tools on this site as well, but you can see here most recent as of April 19th, rent is increasing by close to 10% on a 3-bedroom. Okay, so Andy, I know that you're working with a lot of people that are currently renting right now. Kind of what are you seeing with them, and what are you showing them when you're doing a pre-approval consultation?
Yeah, great question, Chad. Like you said, rents across the board are going up, not only in Cincinnati, but in the tri-states here and all over the country. A good thing that we show buyers now is, look at the last 12 months that you've rented at the property you're at now. We have a handful of new buyers come to us that say, hey, my lease is up in May. I've already been notified that our rent is going to be going up. So we take a look at, in the last 12 months or 24 or 36, however long they've been renting, how much money have you spent in rent? A buyer that is spending $1,000 a month, $12,000 a year in rent, and we look at, okay, what's the rate on that rent that you're paying? What's your interest rate? Well, it's 100%. 100% of your hard-earned money that you're paying for rent is going to that landlord's pocket. And every single landlord out there right now is looking to raise rents. They have been. And Cincinnati has been known for some of the highest rent raises over the last 3 to 5 years in the whole country. So we look at, okay, what is your comfort level? You're renting now. Now, here's what it takes to actually get you into a house that's going to probably have more room for you, have more privacy, have some land, and have a place to either grow your family, start a family, or really just grow overall.
Yeah, good stuff. All right. So here's one of those tools that illustrate exactly what Andy was just talking about. You take the difference between purchasing versus renting. This is those green boxes, those indicate what your loss of wealth is. Okay, so the difference between renting versus buying, you're going to miss out on accumulating wealth through the equity, and obviously it makes sense. So like if you look at the bar graph, okay, the blue, the solid blue, that represents your mortgage. Okay, so a mortgage, even with taxes and insurance increasing in small increments every couple of years, your mortgage payment is going to stay pretty steady, right? If anything, it's going to go down, right? Because you're going to refinance possibly if you're purchasing in today's market. With the rent, it's going to go up. So even if you start a little bit higher on your mortgage payment today, eventually that will even out and you're going to be in a better spot cash flow wise. Now, while you're in that steady payment, okay, you're going to be paying down the asset, which is the mortgage. Okay, you're going to be paying that liability down that is actually secured by the asset of the home. And while that home is continuing to appreciate, okay, you're gonna accumulate what's considered equity or wealth that we're talking about here. So this is a really good tool that we use with our renters. And so, okay, so we just kind of covered, all right, is it a good thing to rent versus buy? So here's kind of, to follow up, here's what homes have done nationwide as far as appreciation over the last 5 years. Okay, so 2017, if you purchased a home, most likely it was probably around $236,000. Okay, that was the median purchase price nationwide in the United States. And Andy, talk to us about what you see on this chart and what that accumulation, or excuse me, what that appreciation looks like.
Yeah, absolutely. So appreciation over the last 5 years average has been 51% appreciation over the last 5 years, which is just absolutely insane. So the people that have been renting and have been looking to get into a house, the ones that got in the house in 2018, 2019, prior to COVID, now are looking back at all the equity they have in a house, even when they put the minimum down, say 3% down 5 years ago. The amount of equity that they have now is more than it's ever been in history. They say right now that across the United States, homeowners currently have the most equity in the houses that they own than ever in history of mortgages, which is just an absolute amazing number to see. And it's not too late. Houses are still appreciating, as you can see, in 2022 by over 18%. So seeing what 2023 and further is going to bring, now is definitely a great time to find that first home, buy your next investment property. Like Chad said, we've got some investors on here who already own homes. We've got new home buyers that are looking to move and sell. So this really goes for everybody on this call.
Yeah. So a quick formula for everybody out there to kind of jot down is ROI, or return on investment. Okay. So if you were to purchase a house, and let's say you put 10% down at that 250 range, that's $25,000. Okay. And in that graph that you're showing, it would appreciate by 135,000. Okay. So you take 135, that's the gain, minus what you put down, which is the 25. That's now 110. So you take 110 and divide it by the 25,000, which is the investment, and you show an incredible return on investment. So that's a good, really quick calculation that you can look at, and everybody should always be looking at. And that is why real estate is, the undisputed heavyweight champion as far as investments. If you look at it over time, going back decades and decades, it is always the investment that is always making people money. Okay. So, all right, so let's talk about, so that's kind of like that's the rent, and that's the history of real estate. Now let's talk about what's going on in the current market. Okay. So currently, what kind of market are we in, Andy?
We're in a seller's market.
We are in a seller's market, right? So how do we calculate that? We look at how many houses per month are being listed. Okay. So currently, statistics just came out. It's, depending on which one you're looking at, it's somewhere between 15 and 1,800 new listings. And then we look at how many sales happened during that same period of time. And we're right at that same amount, just a hair over that. So what that means is, if there's the exact same amount of listings, new listings coming onto the market in 1 month period, and the exact same amount of sales happening during that same time, that means that we have 1 month worth of inventory. Okay, does that make sense? All right, so we have the same amount of new listings as we have houses sold in that same period of time. So what that tells us is that we are in a seller's market. Okay, so to be able to get to a buyer's market, so kind of the graph here that we use is there is 1 to 6 months worth of inventory. That is a seller's market. It's somewhere between 6 months and 7 months worth of inventory. That's a neutral market. Okay, and then anything above 7 months is a buyer's market. So if anybody's out there, if they've talked to anyone that have said, hey, I want to wait until it's a buyer's market, you need to know the statistics. You need to know we need 7 times more inventory to get to that seller's market, or excuse me, that buyer's market. Okay, hopefully that makes sense. So looks like we were going to jump onto the home buying process. Okay, so this is what we're here for, right? So these are the 4, we simplified it into the 4 steps of the process. Okay, so let's dive into step number 1, and what everyone in the industry considers the most important step, and that is getting pre-approved before you go and look. So pre-approval process, 3 pillars that we talk about. Okay, credit, income, asset. So let's talk about the first one, credit. Andy, what do you look at when you are reviewing a credit score or a credit report with your buyers?
Yeah, great question, Chad. So credit score ranges go from 350 to 800, anywhere in between. When we're looking at a credit score for a buyer, we're first going to look at the score. Now, the credit bureaus they give 3 scores. We're going to look at the middle score for the potential buyer, and that's what we're going to factor your qualification on. Now, let's talk a little bit about what goes into credit. Even before that, let's talk about the average credit score in the United States. It's 695. Now, there's buyers out there that are following Credit Karma and Experian alerts and alerts through Discover Card, and you're seeing a credit score maybe every month that you get. Don't be alarmed if that number is extremely low, okay? Or if it's not where you think it would be. The trend that we use is called FICO 8, and is what the mortgage companies, car companies, and all the creditors look at. So what we're going to look at and what goes into the credit is right here on the screen. So we're going to look at the amount you owe. That takes up about 30% of your score. So it's looking at, okay, you've got $100,000 worth of credit that's out there, whether it's car loans or installment loans, home loans if you're looking to buy another house, credit cards, and also student loans. Payment history is the biggest one, over 35%. So if you have a ding on your credit and you miss a payment for whatever reason, my advice is to do whatever you can to get that removed. Sometimes it's as easy as one quick call to customer service and explain what happened. If it's your first time, you can always find opportunities to get that removed. Next is length of credit history. So how long you've had your accounts for. New credit mix. So we want to see a credit mix of installment loans, student loans, and credit cards. And as you start to buy your first house, your second, your third, you're going to get the mix of mortgage loans there as well. Now, don't fret. If you think your score is a little too low to get pre-approved for a mortgage, that is fine. Come to us. We'll take a look. We'll have you do the application, and we will consult you and find ways that, hey, we can do this in the next 30, 60, 90 days to help get your credit score up to where you need to be. So never hesitate. If you think that you're not worthy of credit-wise to get a mortgage, we'll go through that with you. So the next pillar is income. So obviously, as you can see on the screen, a handful of different types of earners and wages. So we've got salary clients, buyers that make an hourly wage. We've got fixed. So we've got people that are retirement, people that are getting Social Security, pensions every single month. Self-employed buyers. We work with a ton of self-employed buyers, business owners, hairstylists, cosmetologists, other variable income. So we've got waitresses that work off of tip income, part-time jobs. We can use 2 part-time jobs if you've been there for 2 years. Bonuses, commission, child support as well. We can use it as a qualification. So there's all sorts of types of income that we can use. And once you put that application in, we go through all that with you and go from there.
Yeah, and what's interesting with the income is it also mixes in, and actually credit follows suit as well. So a lot of our actual products, conventional, FHA, VA, USDA, they're the obvious thing is they're going to go off a credit score, right? But also what a lot of people don't understand is that income also helps you either qualify or disqualify you from certain programs. I'll give you a perfect example. It's our new product that we're super excited about, right? The 1% down conventional loan. Okay, so if you are on the call and you haven't heard about the 1% down conventional loan, please ask us about that. But basically it is, you have to income qualify, meaning that you can't make over a certain amount depending on where you live or where you're going to buy. Okay, and then you have credit qualifiers as well, but it's a great program. So if you think conventional loan, the minimum down on a conventional loan is typically anywhere from 5 to 3%. For special qualified people, it's 3% down. This program takes those 3% down buyers, and we fund back 2% to the buyer as a credit. Okay, and they only put the 1% down. Okay, and that's not a second mortgage. That's not something, that's not like a lien that you have to pay back. That's just a straight credit. So a really great program for those that qualify for it. We've got all kinds of different programs like that. So just wanted to jump in on that. So talk to us about cash to close. Yeah,
absolutely. And just to back up one quick point on the income, we can look at creative ways to help you qualify for the loan. A big example for new home buyers is finding a cosigner, finding a parent or a grandparent or your fiance to help you qualify for that loan as well. So that's something that we always look into to find ways to make your income work.
Well, I know you work with tons of self-employed buyers as well, and you guys absolutely just crush it with them, because that's a tricky calculation sometimes. So you have to really know what you're doing. And I'll tell you, if you take tax returns into 5 different banks, you're going to get 5 different answers on what that borrower income looks like. So word of the wise, make sure that you're getting with really good professionals when it comes, if you are self-employed.
Gotcha. So we'll talk about the pre-approval consultation here in a little bit, but one of the biggest things that our clients ask us is how much money is it going to take for me to get a house? So like Chad said, on a conventional loan, as low as 3% down, 1% with the new program that we have that we'd love to talk to you guys about here in the future. And then on an FHA loan, 3.5% down. If you want to go all the way up to 20%, you're going to avoid PMI. Our goal is to sit down and consult with you, find out how much you have available, how much you can get gifted from a relative, which is great. We find ways to utilize 401k. There's many companies out there that allow you to utilize your 401k to buy your first home without the tax implications. Tax refunds are a big one. Tax day was this week. So, it's crazy that, you can get into a house for as little as $3,000, as little as $5,000. And a lot of the tax refunds that our clients are getting can go to help them, buy those houses. Bridge loans are a big one for the clients on our call here that already own a house. We can utilize the equity you have in your current house to find the funds to buy your new house. IRAs, DPA. So there's some gift options out there. So we've got the assistance that Chad talked about earlier, where we're helping you with 2% of your down payment. We've also have some other gifting options if you qualify that we can help you with as well.
Yeah. So the big thing is we're going to slide into the actual pre-approval consultations that you run. But with the cash flows, we're always making sure that we're focusing on, not just down payment, not just cost, but we're talking about, what we call cash to close, right? It is, that's the actual funds that you're going to be bringing to the closing. Tell a quick funny story, just came up today. We have a buyer that we're working with here in the office. Came to us kind of late in the process. They were already in contract. They were working with another lender. For several reasons, they wanted to jump ship from that lender and come work with us. So we're, filing through their paperwork, and we get to the cash to close, right? And, let's just say it's, $20,000 that they're bringing to closing, okay? She said, yep, we have it. It is actually under the mattress. Like, actually, it is cash. It is under the mattress. So that is an option that we want to avoid that, let's say. So, cash is actually a 4-letter word in the mortgage industry. Okay. So we want to avoid those. And we want to make sure that they're sourced, the funds that you're going to be bringing to the closing is going to be sourced in season. What that means is it's got to be somewhere that we can see it. We need to know where it's been for 60 days. Okay. So, really, avoid the mattress money, let's just say. All right, so Andy, talk to us about the difference between pre-quals, pre-approvals, and pre-underwriting.
Yeah, absolutely. So with UMortgage, once we have our initial consultation with you, we're going to have you complete a loan application. That's an online application, very simple, only takes about 20 or 30 minutes of your time. Once you do that, we're going to dive deep into your credit, income, and assets. We're going to have a face-to-face or Zoom consultation with you. We like to make that easy because, whether you're buying your first home or it's been a few years since you bought a home, we want to walk through everything with you, talk to you about the changes in the market, and really make sure that when you put that offer in with your agent, which we'll talk about here in a little bit, you're 100% prepped, 100% ready, and are just knowing everything that's going into the loan so there's no surprises. So pre-qualification, what that is, you guys have probably heard of Rocket Mortgage, Quicken Loans, some of the other big banks. A pre-qualification letter is something that a seller in this market is not even going to look at. They are going to say, okay, this buyer clearly is not pre-approved. They've not went through the process with the lender. And how do we know that this offer out of the 15 other offers we have is going to make sense and work out and be the best for our seller? We don't do pre-qualifications like some of the online lenders do. They will just take your information. They won't ask for your documents. They'll do a soft check on your credit and really just go off of your word and issue that pre-qualification letter. What we do here, the next 2 steps that we can do, number one, the most popular step is a full-on pre-approval. We are reviewing your credit in detail, your income, and your assets. We're having those consultations with you to find out exactly what program you qualify for, what comfort level you have, whether you're buying a $200,000 house or a $700,000 house. We want to make sure that the areas you're looking in, what are the taxes in that area? Are you going to be able to afford the taxes in the area where the school district is extremely appealing, and make sure that 100% you're ready to go. Now, there's cases where we will actually fully pre-underwrite your file. That's taken an amazing step that we do for a lot of our clients, and we're actually going to have an underwriter in-house review your whole file before you make that offer. What's great about that is there are no ifs, ands, or buts. We know that we have everything tightened up and ready to go, and that's really going to make the strongest offer and the strongest pre-approval that's out there for us to help you win that deal.
Yeah, so just yesterday on our company-wide call, we talked for about 5 minutes about the pre-underwriting step here at UMortgage. We're actually expanding that and super excited about that because we are going to be bringing even more underwriters in. This is the next phase of this game, okay? And we're 5 steps ahead of everybody else out there because we have the capability of pre-underwriting and we are committed to being able to do it, okay? So to kind of recap some of the things that Andy was talking about, pre-qual, we're just, it is just a skimming of the information. We actually do not do pre-quals here at UMortgage, okay? It's just not worth anybody's time. Like Andy said, no seller is going to take them serious because you have to really bring your A game in this market, okay? Pre-approval, we're reviewing everything. We're basically underwriting the file. And then 3, pre-underwrite, we are actually underwriting the file, okay? All it's missing is the address. So because we do so much work up front before our buyers are getting actually into contract, that's how we have the nation's quickest turn times when it comes to contract to clear to close. We're actually averaging 13.2 days calendar days, okay? So if you think about a national average of over 30 days for to getting to your clear to close, people are writing contracts for 30, 45 days. We're getting it done in 13 days, okay? So why is speed so important? We're going to talk about that here in the next couple of steps. So step number 1, super important. You've taken the time to get pre-approved. You understand your numbers. You understand your cash to close. You understand what you qualify for. You are fully educated in the market, in your products, in your numbers, okay? So now it's time to what? Go shop, right? So what's the most important thing when going out to shop, Andy?
Yeah, so the most important thing is communication and teamwork, okay? So between us here at UMortgage, yourself and your trusted real estate agent, who we have a handful on the call today. By the way, I see some questions. We will get to the questions here at the end. We've got a handful of questions here that we want to make sure we get answered for you guys. We'll save that to the end. Communication is number 1 and teamwork. So we are working together to help find that house for you. So going into the actual home search with the agents that we have here and your agents that are not on this call, it's important to know, okay, speed, great. We can close this in 13 days, which is crazy when the average industry is over 30. Okay, here's some do's and don'ts. So obviously keeping all your records in good order. We're gonna talk to you about that and get everything that we need when we do your pre-approval. Okay. Now, sometimes you may be looking for more than a week. It may take 30, 60, 90 days. Make sure that you don't lose sight of your credit. You don't lose sight of any bills that you have, and you are not afraid to ask us questions. Okay. Don'ts. Don't change jobs during the process of us pre-approving you or when you're actually into the loan process itself. Don't apply for new credit cards, car loans, anything like that without coming to us first. And this goes, we're usually without saying, but don't change your job if you can avoid it. Don't quit. And also, one of the most important things, okay, do not walk into a house for sale, go to a neighborhood open house, go to a new build that you see in a neighborhood that you love without consulting your realtor first, okay? As a buyer, the realtor that's been doing this for so many years, that's extremely great and talented what they do, they are there for you at no charge, right, Chad?
Right.
So
that's right. The buyers actually do not pay for the real estate services of the realtor. Okay, that's something that a lot of buyers don't understand, and the value that you're going to be getting from a licensed, trusted real estate partner, that is invaluable. Okay, we have several transactions over the decades that we've been doing this, where there's no real estate professional involved in the transaction, and it's an absolute nightmare for everybody involved. And there's certain laws and guidelines and bylaws that govern over this industry, and there's really specific ones about if a buyer specifically if you cross over the threshold, that's the actual law, meaning if you walk in the front door, or I guess any door, front door, back door, whatever. So if you walk into the house, that is that creates a a certain type of law that you have to follow going forward on that property. So it gets really, really sticky at times. So do's and don'ts. Number one, work with a realtor, work with one that's trusted, licensed, listen to what they say, listen to what we say. Professionals, we will take care of you. All right, so you're pre-approved now, okay? Now you're out shopping. The shopping process can take months. It can take 6 months. We've got some buyers. Vinny just closed one, working with them for over a year, okay? So that's just part of the process, part of the market, and sometimes just specific to that buyer, right? So what happens when you find the property and you view it and you say, okay, this is the one, we want to make an offer. Andy, what are we doing right now to get these offers accepted?
Yeah, so here's how we're winning. Just recently, there's upwards of, anywhere from 30 to 40 plus offers going in on houses over the weekends and during the week. Here's what we're doing to stand out to help you win that offer. Number one, once that offer goes in, even before that offer goes in on the house, we're going to have another call with you, whether it's morning, afternoon, or night, doesn't matter when, we're going to be available, and we're going to run through all the logistics again on this offer you're going to put in, making sure you know an extremely accurate estimate of how much money you need, what the total payment is going to be, and the timeline. Now, once we have all that set, we're going to give your pre-approval letter to the agent. They're going to put the offer in. Within 1 hour, we are calling that agent for the seller. Okay, our goal is to get them on the phone, send them a video message, go to their house or office, whatever it takes for us to talk to a listing agent, we're going to do so. And the reason we do that is a couple things. Number one, we want to let them know why this offer needs to be accepted. We're going to talk you up. We're going to talk your agent up. We're going to explain the process, and we're going to ask questions that oftentimes that agent may not communicate back to the agent to put the offer in, okay? Maybe the seller needs to stay at the house for an extra week after the closing. Okay, great. We can take the information back to you and the agent, and we can say, okay, we're going to allow a 2-week lease back where where the seller can stay in the house to help them get into their new house. Okay, we're going to find out what's important to the listing agent and that seller and make sure that we can do everything we can to have the offer stand out and make that happen. Pre-underwriting the files, we've already talked about that. That's a huge one. And a lot of that is the reason why we're able to close your loan in such a short period of time, 2 weeks. Gap appraisal. Let's say that you really want to make an extremely strong offer. You're so confident that you want this house, and we will do our due diligence to make sure that the comparable home sales in the neighborhood are there to meet the price that you're going to request. But one of the things we can do to even show more confidence is we can offer what's called a gap appraisal. Okay, so let's say that appraisal came in $5,000 short, but you went $5,000 over the list price. We will put it in writing in the offer that you will cover that gap. And that just gives the seller and the seller's agent more confidence in accepting your offer. Obviously, fast close, we've talked about that. We've talked about the delayed occupancy. And then a couple other options are, like we said, getting those funds to buy your house through a bridge loan, through the gift funds, through whatever it takes. We're going to communicate all of that when your offer goes out.
That's right. And here's the deal, okay? We spent a lot of time at the beginning of the call explaining what's going on with the market. That's not to obviously scare anybody, it's to educate, okay? These tactics that we're doing today on every single contract that we win for our clients, that's what we do today, okay? It is not what we did 5 years ago, and it's probably not what we're going to do 5 years from now. It's what's needed right now for our clients, okay? The goal is not to have our clients pay the most money on every single transaction, okay? It's for them to get the home that they love, okay? In some of these tactics, like Andy mentioned, where we're offering for the seller to stay in the house after closing to allow them to maybe go find the house that they want to buy, or the gap appraisal or the escalation clause, all of these tactics are tactics that are used to be able to get that buyer the house and for our offer to stick out. Okay, so what I want everyone to imagine is if you're the seller, you've got, let's just say 5 offers, and they're all spread out on your kitchen counter, and you're looking at those and you're like, okay, there's UMortgages, and it's got a fast close, but we get to stay in the house for another 60 days after closing, and it's got a gap appraisal on it, and it's got escalation up to this amount. Okay, and then here's PNC Bank. The loan officer never called us. It's got a pre-qual letter, where UMortgage's loan officer actually called the listing agent, explained all this information. The idea is we just want to stick out. We don't want to be the highest number every single time. We want to make sure that we're sticking out. So that wins you guys the deal. All right. So that's how you make the offer stand out. And Andy, I know I'm doing it on every single deal, and I know you're doing it on every single deal. So that's what it just takes in this market. Okay. All right. So next. All right.
So here's Go ahead, Chad. I said this is the fun part now, right?
Yeah, you're in contract, right? All right.
Time to celebrate. Well, here's the thing.
Yeah.
Once you're in contract, we still have a ton of work to do. Okay. Now is when we shine. Okay. And when you shine. So our goal within 24 hours of you getting in a contract is to have our another consultation meeting with you. We're going to prepare your loan. By this time, we've already probably talked about the best down payment for you. We've talked about the prevailing interest rates and really what makes the most sense for you. So next step is signing your loan documents. Okay. When that happens, we are going to go into overdrive of getting your loan into our underwriter's hands and our processing team's hands to take it from step C all the way to Z at that point. We're going to order your title work. We're going to order an appraisal once your inspection is done. And that appraisal is for the lender, but it's also for you to know that you're buying a house at the right price and that the home value is at or above what you're buying it at. So our goal is to get your loan into underwriting literally within 1 day after you sign the documents. Okay. We're going to introduce you to a processor who's going to send you a video. They're going to call you. They're going to get to know you and talk to you and really make you feel like part of this process as well. As loan officers, Chad and myself and the rest of our team, we're still there for you throughout the process. We're going to be talking to you, almost on a daily basis. I mean, think about it. 2 weeks is not a long time. We're going to be talking to you every step of the way, every day throughout the process, and making sure that you not only understand what's going on, but you never reach out to us and ask what's going on. We're going to keep you abreast of everything throughout the whole thing. Okay. Now, once we get your initial loan approval back from underwriting, generally at that point, we're waiting on your appraisal, a few other items, maybe an updated W-2 or a pay stub or an explanation letter. At that point, our job is to get that loan back for a second time to the underwriter to give the final full approval, or what we call a clear to close. Okay. Once we're clear to close, from there, even though we're closing loans so quickly, most of the contracts we're seeing are still, 25 to 30 days out. Our goal is, 1 to 2 weeks ahead of your closing date to have everything finalized, all of our ducks in a row, and really you're literally just waiting for the keys at that point. So your agent, the title company, and ourselves will then help set up the closing time. Generally, it's going to be at the title company's office, but we've had some crazy opportunities to sign at hotels before, or if a client was out of town on vacation. We'll do whatever we can to make that closing, as extremely easy as possible for you guys.
Man, what a good feeling it is when that loan is clear to close 2 weeks ahead of the actual close date. It just makes the process of the final walkthrough and sitting down at that closing table across, buyer and seller across from each other, smiling versus the opposite of that. So, all right, so those are the condensed 4 steps of purchasing a house between the pre-approval, shopping, making an offer, and then closing on a home. Okay, so now the next thing is we just want to say is everybody on this call right now was referred by someone who cares very much about them. So either a real estate agent that you're working with, or maybe someone that actually has closed a loan with us in the past, somebody that's in our pipeline right now. We actually have somebody on the call who referred their sister, who is in our pipeline right now. So what our entire model is to do as good as we can on every single loan. So with that comes, the gift of a referral. Okay. So we would ask that everybody on the call, if you're getting value, please tell us someone that will possibly want to work with us. These are our net promoter scores. What that means is after every single loan, we survey the client and we ask them, how did we do? And these are our scores. These are actual true tests right here. And some of the competition where we rank with them. We will not stop until we get to 100. Okay, that is our goal. That's the mission that we set forth on, is to get to that. So we really ask that if you have someone in your life that you care about that's renting, or if they own a house and they're looking to purchase in the next 2 years, please fill this out, and there should be a link as well in the chat. Fill this out, your name, information, and who you'd like to refer to us to speak with. We're not going to do anything but treat them like gold, like we're doing with you. Okay. Now, I believe we have some questions, so we want to make sure that we cover those and still get you guys out of here at a good time. So while you're filling out your surveys, and that is also how you qualify for the $300, is filling that survey out. That's the last step for you. We're going to answer some questions. So,
Yep.
Are they on?
First question, I'm not looking to buy until the end of summer. Should I wait to start getting pre-approved?
Andy, you take that one.
Okay, so the question was, I am not looking to buy until the end of the summer. Should I wait should I wait a while until I get pre-approved? Absolutely not. No better time than now to start that journey and start that process. You know, whether you are buying in the next month, the next 3 months, or maybe you don't feel like you're gonna be ready for a year. Get the ball rolling now so we can help guide you through that process. There's tons of cases where we have clients that think that they're not ready to buy a house just because they don't understand the process. Once we sit down and show them their credit score, we look at their income compared to all the liabilities that they have every single month. You know, there are clients that are more ready than they thought. And if you're not ready, based on your credit or your income or anything like that, we're gonna consult you and help you get ready. So to answer the question, it was long-winded. Now is the time to get pre-approved if you're buying at the end of summer.
100%. Even worse than what you said is the buyers that think they're ready. Yeah. They go, you know, they're shopping, they find that dream home, and then we find out, oh, something's wrong with credit or your income or something like that. So always be prepared, like the Boy Scout said, right?
Next question. How long does it take to close on my home once I'm in contract?
Okay, great question. So as long as you'd like. I know we said our average close times are 13.2 days from the time that we get that contract in hand to the time that your loan is clear to close. We have many cases every single month where we close loans in 7 days, sometimes as little as 5 days. So as long as you need, I guess is my answer to that question, or as short as you need.
Awesome. And then the last question is, if I have a house with a mortgage with a low rate, why would I sell now and take a higher rate?
All right, I'll take this.
I'll try to take this one.
So the scenario is, if I'm hearing it right, the scenario is person on the call has a low interest rate now, which, you know, I just read a stat that 63% of America has a 4% or lower interest rate. Okay, so if you have a mortgage right now, you have a 4% or less interest rate. So this applies to a lot of people out there. Okay, so why should you not wait for rates to fall, right? And why should you list your house now and have to take a higher rate? Okay, so my answer to that is this. Okay, when rates fall, okay, because they will over the next year to 18 months, okay, when they fall, all of those people that are waiting are going to come into the market, and there's going to be more sellers. So now is a better time for you to be a seller. Okay, we just talked about it's a seller's market. So get the house for sale, all right, and we can implement one of our 100-day plans of getting you a house within that 100 days. Okay, so is there any other questions? Hopefully that answers that question.
That's it.
All questions? All right. Okay. So, and we are at 12:46, so we did a really good job. All right. Thank you everyone for being on the call. Really appreciate all of our business partners, all of our buyers out there. Everybody stay positive. It is a great time to buy. If you have any questions, please feel free to reach out to myself, Andy, or anybody else here at UMortgage. Thank you so much for joining the call. Please fill out your survey.
Thank you.
Bye.
Bye-bye.